Welcome to day 4 of the day trading bootcamp. Today, you guys are going to take your first paper trade, so it's going to be freaking awesome. So today, right, you're going to learn how to actually paper trade. I'm going to teach you guys about market and limit orders as well as take profits and stop losses. I'm going to walk you through the paper trade as well. Today's game plan, I'm going to talk to you guys about paper trading, pros and cons of it, show you guys the market and limit orders, the take profit and stop loss, what those actually are, as well as show you guys how to take your first paper trade on TradingView, which you guys can follow along with. And then I'm going to end off with homework. So what exactly is paper trading, also known as demo trading? So essentially we're just using a software, and it's going to be real market conditions, and we're basically just simulating a position. So we're not actually putting any money down, we're using fake money. So that's why they call it paper or demo, paper trading. So any position that you enter really is going to mimic how if you actually enter, but obviously it's not real money. It's kind of like for practice or like a video game basically. So I mean, some pros of it is that you can learn without risking any real money, preserve your capital. You can practice your entries and exits, learn your strategy as well. And it's great, especially if you already have a strategy and you just need to figure out how to execute it properly in real time. Then paper trading for like a week or 2 weeks is the way to go. And then you are also able to journal your paper trades. And again, you're not risking any money on the line. So there's no pressure, no financial risk. You're just narrowing down on how to get better at execution for your strategy. You can also back test as well, which you'll learn in a later video. But essentially, we'll look at old market data. Like, for example, if we want to test January of 2020 or March 2020 when COVID happened, we can go to those days right now and test the entire month or even multiple months of 2020 within an hour, because we can just play bar by bar through that, which ties into replay and simulation, right? You can look at old market data and just gather data on your strategy and test it out and see if the strategy that you choose or if you find one online actually works. And if you know it works on old market data, you can try it through paper trading after. And of course, building confidence, right? You want to come to the market where you're not nervous to take your setup. But there are some things that you don't want to rely on for real trading while you're doing paper trading. First, right, when you're paper trading, it's not going to mimic the conditions in terms of like psychology. You're not gonna feel the emotions watching money move up and down on a demo account compared to an actual account. When you guys first start trading, whether it's funded or live capital, and you see the dollar amounts moving up, your heart's probably gonna your heart rate's gonna go up. And you'll start feeling some things, and maybe you'll start doing some dumb decisions. I mean, it sounds really easy to say to just like follow your strategy, but it's kind of like when people go to the casino and then they start losing money and then they keep trying to gamble some more to make it back. Like you can tell them like, stop gambling, you're just going to lose more money, and they know that, right? But again, this is back with the emotional pressure. There's no emotions of fear and greed when you're paper trading, because right, it's not real money. Who cares? The other thing is that paper trading is not always going to give you the most realistic fills or slippage. Since we're trading futures, this is not a problem at all. But for people who do, for example, like meme coins or small cap stocks or crypto, that won't really be able to mimic real conditions, because if you're trying to enter in with $1 million in a market that maybe only has like $10 million, I mean, if you try to do that, it's going to be hard to on an actual trade with the actual money. But because we're trading futures, it's the most liquid thing ever. I mean, it's not. Don't even worry about that. The other thing is, you might have fake confidence. You might have a good streak on paper trading, and even if you don't have the back test, you might think that you're suddenly the best trader ever. Especially like if you double your account on your paper trading account, you just might think you're the best trader, and those results might not convert into real trading because simply you aren't able to take the same trades, or it could just be beginner's luck as well. Another thing is that when you're doing funded accounts, right, paper trading doesn't really follow the same risk. So when we're going to paper trade, we want to make sure we're following exactly how the funded accounts are doing it. So for example, the fund accounts are giving us 50K in capital, and they tell us we can't lose more than 2-3K at any time, right? When we're paper trading, we want to make sure we are trading the same exact way, where we're not losing more than 2-3K at any single time. You can kind of like mimic how the funded account challenges are. So that's the correct way to go about it. Also, you won't really feel drawdown pain or like feel those emotions again. So let's say you're down $1,000 on a trade and you were risking $2,000. I mean, you're just not gonna feel it compared to like actual money. If you see an actual trade that says minus $1,000, I mean, you might start getting a little nervous, you know. And then scaling psychology, like size, consistency, and stress, like plays back into emotions. You're not gonna feel emotions. And if you have bad habits on paper trading, I mean, you might not immediately get punished for it, right? If you have really bad habits and you start losing money on actual account, you're gonna pretty soon realize that, oh shit, I'm making some mistakes, it's costing me money. But paper trading, right, maybe you take a $5,000 loss, you're like, whatever, it's not real money anyways. Guys, take paper trading seriously. Like, it's very easy to not take it seriously, but as long as you use it in a way that helps you gain skill and you mimic actual trading conditions in the way you would actually trade, this is extremely, extremely helpful tool, and every trader should be doing this before they actually get into the market. Now, there's two kinds of orders that we can use when we're trading, and you kind of need to know these because how else are we going to get in the market, right? So we have the market order and the limit order. The first one is, the market order is what everyone knows of when you try to trade, right? It's those buy and sell buttons. When you buy in, you instantly get into the market at what the price says, and then if you press the sell button, it's just gonna instantly sell at what the market says. So pretty much just pressing buy and sell, and you're gonna get in at whatever the price of the chart says. Now, the second type of order, which is very useful, is called the limit order. It's a little bit hard to understand, but once you get it, it's very simple. So essentially, we're sending a price out in the market, and we're saying, let's say we're gonna buy, right? In this situation, let's say we want the price of a stock to be bought at $50, but right now, let's say it's trading at $60. We essentially send our order out to the market, and it's gonna be like a line, right? It says, if it hits this $50 mark, we're gonna buy. So basically, price would have to come down and touch $50, and then when that $50 is touched, our system basically says like, okay, we're at $50 because it's at, we want a price at $50 or lower, then we're actually gonna buy in. So once price comes down and taps $50, we're in our buy position, and then right, we would buy it for $50, and let's say it goes $100, then we would sell it at a $50 profit. I think best way to explain it is kind of just pretend like you're sending a robot guy out into the market. So let's say you have a car you're trying to buy, and right now the car is going for $200,000, but that's out of your budget, right? So you send a little robot out, and this guy, he's gonna constantly watch the price of that car. And let's say you want the car for $100,000. You're basically telling this robot, as soon as this car hits $100,000 or a lower price, I'm okay with buying. So that's the same exact concept. And price goes down, of that car goes down to 100,000, boom, we're in. We're buying that car. We're locking it in. Now you might be wondering, what happens when we set a limit order above what the current price is? So back to the car example, let's say the car is $200,000 and we send a robot out and say, buy this car if we're $300,000 or under. The robot sees the $200,000 car and it's gonna say, okay, I see it's $200,000. We want something $300,000 or lower, so I'm gonna buy in. So it's gonna buy your car at $200,000 because you said 300K or under is good for me. And because price is currently at 200K, we're getting it in at 200K. So limit orders are good because you're essentially guaranteeing a price that you want to buy in at. Versus market order, right? We know the market's always going to be changing. Let's say in the same car example, the car is at 200K, but suddenly we want to buy in, right? So we press the buy button for the market order, and suddenly the car actually jumps to 250K. So we actually bought the car for 250K when we were thinking we were going to get it at 200K. This is where a market order can kind of screw you up, because if the price is moving too fast, you might get a bad price and pay more for what you wanted it at. Now, that's the limit order. So the other thing to understand is a sell limit order, or if you want a short, right? It's essentially the same as the buy, but it's flipped. We're saying if price is at this level or higher, then we're okay. So in this case, let's say the stock was trading at $40 and we're saying $50 or higher, I'm going to instantly sell. I want to sell as long as we're above 50. So if price comes up and hits $50, our robot's going to say, okay, get us out. We're going to either be shorting this at $50, or if we're in a long or buy position, then we're just going to get out and sell at $50. And yeah, this is why limit orders are great, because you can lock in the price that you want. And just for better visualization, I have another example here. So the buy market order will say, all right, it's going to get in whatever price is at, but you can see here, in this case, you might get a bad fill if it moves up too fast. With that difference between pressing buy and what the market actually is. And if you press sell, right, the order might give you a worse price than what you actually said. But if you have the buy limit, right, let's say we set this as our buy limit. If price is trading here, we're not going to be in any position until price moves into that line. And once it does, then we're in our buy position, and right, we hope that it goes up so we can sell for a profit. Now, if we have a sell limit, assuming we're in no position, we were basically saying at this line or higher, we want to get in at. So in this case, if we don't have a position, then it will just have us go in short. So if price is trading here and comes up and taps this red line, then we're in a short position, and we hope it goes down so we can make some money. Now, this ties us into take profit and stop loss orders. So like those limit orders we had before, these take profit and stop loss orders are essentially limit orders that we send out with our position. So let's say we have a position, we're going to have a take profit maybe above it and a stop loss below it. That way we always have our position protected. So we're guaranteed to either make money or lose money. And the great thing is that we're going to know exactly how much money we're going to make or lose. So the take profit basically is a limit order that will kick you out in a profit. So if we touch the top, which will be the limit order, and I'll show you guys a picture and example so it all makes sense, then it's going to kick you out the profit, whatever it is, and then the stop loss, it's going to kick you out of the loss. The stop loss, guys, this is the number one rule of trading. Always have a stop loss, no matter what. No matter what, unless your strategy, of course, is not using stop loss. But for us retail traders, we should always have a stop loss, no matter what. And it should be a stop loss that is an order that just sit out and sitting. Never, ever close that stop loss. And the reason why I say this is because anytime the market can do whatever it wants. Let's say Trump announces some news and it's really bad and you're in a buy position. If you don't have that stop loss in, price can go straight down, and by the time you see it, because you might not even be able to react fast enough, you'll see you're minus $5,000 when in reality you were only meant to lose like $800. If you had your stop loss for $800, you would have been kicked out at $800, maybe $900 if there's slippage. But because you didn't have that stop and it dumped so fast you couldn't react and get out of the position, now you're down $5,000 and maybe continues dumping, and now you're like, shit, I don't know what to do. So always have that stop loss, and it should be a part of your strategy. Now let's actually look at what the take profit and stop loss kind of look like on the chart. And I'm going to show you guys this on TradingView later as well, like when you're actually in a paper trade. But let's say here we're in some buys. On this left part, we're in buys, and this is our entry price. Our take profit is essentially going to be the top of this green line, and our stop loss will be the bottom of this red line. So if we enter here and price comes up and taps the take profit, then we get out at whatever we said. So let's say we said plus $500, then we would be at a profit at $500. If price came down and hit this stop loss at let's say also minus $500, then you would lose $500. But notice how like the amount we're making and the amount we're losing is contained. So the good thing is that for every trade, if we have a stop loss, we know exactly how much money we're going to lose on that trade. So there's no surprises, no reason to like go crazy or overreact. You know what you're going to lose going into the trade, and you should know that. And with your strategy, you should know how much you're risking of your account as well. One thing to note is that And if price is just moving in between here, it's not going to trigger any orders. So if we're just zigzagging like this, moving in between being in profit, which would be up here, and being in a loss would be down here, it's not going to trigger any of these orders. And when you're in a trade, remember, you can always close out as well. So let's say you're up and you're maybe only here, and you didn't hit take profit yet, but you're in a profit, and you're like, okay, I think I'm happy with this. And of course, if it's part of your strategy to get out where it is right now, then okay, you can press close on the position and you can take out the profit. And if you're at a loss as well, if you want to close at the loss early, you can close it as well. Now, when you guys are using this tool on TradingView, the long and short position tool, this box here is just a drawing, okay? Some people confuse where they think that if you draw the box from here to here, let's say like the start of this box is like 10 o'clock a.m. and then the end is like 10:30 a.m. They think that if price keeps moving beyond, then it'll kick them out because of time, right? But no, that's not true at all. It's only going to kick you out based on these orders. This drawing has nothing to do with time. This drawing is simply just telling you where these three levels are, where the take profit, entry, and stop loss. So don't confuse time in this at all with this drawing, right? The candles can just keep going beyond it, and we'll still have those orders out, and they'll be out for us and ready when we need it. And then second example, right, the short, right, our entry would be at this line, stop loss up here, because if it's moving up, we lose money, and if we move down, we make money. So if we hit take profit down here, we make money. If we hit stop loss, lose money. So now we're gonna go ahead and hop onto TradingView. Again, if you guys want a free $15 credit, you can use that link. And if you guys are following along as well, I want you guys to make sure you have CME live data on your TradingView so that you can actually take the trades with me. And if you guys need instructions on that, it was on the previous video on day 3. So before we actually start paper trading, I need to show you guys how to actually read the candlesticks. So right here, I'll switch over to the 1 minute chart, and we can see each one of these, right, is representing the 1 minute. And currently it's 12:20 a.m. We can see it says that at the bottom, and it's the latest candle right now. So whenever we have the latest candle, it's always going to show the most recent price. So with this, we can see right now it's a red candle, and the very bottom of that red candle is the current price. And we can see just now we passed another minute, so now it's 12:21, and now we're starting to form this green candle. When we're green, right, the current price is always going to be like the top body part of the candle, and then when we turn red, current price is going to be the bottom part of the body. So we can see right now this black dotted line is going to show, in this case for you, it would be a red dotted line. It will show the current price when we're down, and then when we're up, right, it would be a green dotted line. And of course, if I go to the 5 minute time frame, we can see as well this 5 minute candle is still developing, so this will also be changing currently. Now onto the paper trading. So to get started, we can either press the buy button or this trade button and open up paper trading. We can see all the other brokers, but for now we'll just go with paper trading. And then we have all these accounts that you can see here. If you want to change any settings, reset the account. So let's do reset because I'm doing a separate run. So now we can see our account is back at 50K. So let's try and enter in. So if we press buy, we can see this menu come up. This is pretty much everything we're gonna do. So let's just do a simple buy in with one contract. So each dollar or each point is worth $50. So I press buy, we can see we get entered in. We have this menu pop up, and then also a sound as well. If you guys heard that, and you can drag your stop loss. So let's say we want a $200 stop, which is 4 points on one contract. Something like this, then we can do that like so. And with the take profit and stop loss, right, you can drag these anytime. One thing to note is that if you're trading on a broker, they might not let you drag the stop loss and take profit after you enter in. So that's why you want to enter in beforehand with the take profit and stop, which I'll show you guys how to do in a bit. And of course, you can close out this position anytime. So if you press the X and press close position, there's a setting as well if you don't want confirmation. So if you just press the X, it instantly kicks you out. You can do that. And yeah, you can just exit out and it'll cancel these take profit and stop loss orders. But let me see if I can demonstrate price hitting take profit here. So I'll just move it to like plus 62. So it only has to go up a very tiny bit. Let's see if it can kick us out here. or not. Let's try 37. So if it just moves up a tiny bit, then it should kick us out. Notice how the candle is moving. Now we have a new 1 minute candle. It's gonna update. And this timer shows how much time is left in the current candle. So we can see price just executed our take profit. If we look at paper trading, we can see we got our plus $37 that we were promised with the limit order. And then we can see the execution as well. So if you look at the red arrow, that's kind of where we entered in or sold at, and then the blue arrow is where we bought at. So that's buying. Let me show you guys shorting. So shorting, very simple. You literally just press the sell button and you can press sell. Again, right, this red line is going to show where we entered in at, and we can see it says -1. So that's showing us we're in -1 contract, which is telling us we're in a short. Again, we can just set our stop loss and take profit just like that. And if we instantly close out of this, it's going to cancel our stop loss and take profit for us. Now, let's say we want to enter with more contracts, right? We can try to, let's say, make this 2. So in 1 point will now be worth $100 each, and we can see that pretty quickly. So if I press buy, you're going to notice the point values are going to fluctuate only a little bit more because this is after market close, which is when I'm recording this. And look at our take profit and stop loss now. Now each point is double, so it's $100 per point, which means you can make more money but also lose more money. And again, we can get out, and let's try moving our stop loss to break even. So if it goes down, it kicks us out at $0. So what you can do is no overlap, and now we can see our stop loss and take profit weren't overlapping. So if you just right click it, then you can differentiate your stop loss and take profit, or see that you have a stop loss order, because sometimes it looks like it's hidden, but we can see it hit or break even and instantly kicked us out. The next type of order is the limit orders, which I'll show you guys. So let's say we want to go for a short, right? Remember with the limit orders, or I'll start with a buy first because that'll probably be easier. With the limit orders, we basically are saying we want this price or better. And in terms of a buy, we're saying we want at this level, this blue line, or better, which would be anything down here. So if we press buy here, it's not going to fill us. We're essentially sending a robot out saying, if we see price dip below at or below this line, we're going to try and buy in. Because we haven't yet, right, it's just going to say buy limit. But let's say I move this up here, right, and hopefully price comes down and tags our buy limit order, which just happened. See, now it'll automatically buy for us, and then I can set take profit, stop loss, etc., etc., and I'll just close out of this one. Let me show you guys as well. You can also put your buy limit above the current price. So if we look at this candle and this line, this is the current price. If I press buy, right, even though I put price up there, it filled us out at the current price. So I'm gonna go ahead and just press close, get out of that. Let me demonstrate the short as well. So short, if I put it up here, it's not gonna do anything. If I move it down here, right, we're still above the current price, this white line now, so it's not gonna do anything. Now if I move it all the way down to the current price, we can see we get filled in there. And then again, right, set your stop loss, take profit. Always have a stop, guys. And I'll demonstrate executing below the current price. So this is the current price up here. Now let's say I put a limit order all the way down here. That's okay, right? Because I'm saying anything above this price is good. So what it's going to do is execute me at the current price, because price is above our short limit order. So if we press sell, we can see we get executed up there, and we can confirm in that short that -1, which is great. Now we can see we're take profit and stop loss. So I'll go ahead and instantly exit out of that. Notice how I'm instantly exiting in and out. That's going to cause us to get a little bit cooked by the spread. So we can see we're actually down. So that's why you don't want to just like randomly trade. But let me show you how you can enter in, or the way I like to enter, and also how you would probably want to enter in when you're trading with an actual broker or funded account. So usually when you're trading with the funded accounts, if I go to, you will use TradingView, but we'll just stick to paper trading. But you essentially just log in into TradingView, and it'll say TradingView down here. But I reset the account just now, and I'm going to show you how I enter in. So what I use is the long and short position tool, which you should already have favorited on your chart. So I'm going to press the long position tool here. And let's say I want my take profit to be 4 points, stop loss to be 4 points. And then this center line is going to be what you enter at, so it's going to be your limit order. What you want to do is right click this and press create limit order. So now we have all three at once, because with the brokers you can't just drag the take profit and stop loss if you enter in with none of them. You have to enter with the take profit and stop loss all together if you want to be able to drag it. So let's try the limit order. Let's just try one contract here, and if I press buy, look, we're not going to get filled, right? Because we're not yet under our buy limit and we want this price or lower. So let's see if we can get tagged in here. We can see price retraced. It's exactly at the level. There we go. Now we're in. And now we can see, all right, we're in and our price is now moving. And yeah, if I want to get out, I mean, I can simply just press close position and it'll kick me out whatever market is at. So that's the way I like to enter in. And if you guys want to, you can also do a market order this method as well. But I prefer limit orders just because it keeps me more disciplined. And I will go for a price that I actually want. But market order, if you want to, like, if you right click it and you can see it's going to fill in our take profit and our stop loss. And if I press buy here, right, it's going to fill me in and place that as well. But I can show you guys where this could actually go wrong. So I have this tool up here and I try to mark it in from there. Look at this. Price is down here, right? And I have my stop loss at 77 and my take profit up here. If I press buy, you see how cooked that is? It's going to fill me down here, even though I wanted like a better price. But that's kind of the reason why I don't do that. And if you do short, it's the same thing. Just grab the short position tool. It's the same thing but upside down. So you can just right click, do that, and then we can see if it gets tagged. But I'm gonna move this, and remember, like, these are all orders, so you can move them around even if you're not in yet. So let's say I just want to move it to here to tag myself in. I can do that like so. And yeah, and I'll just kick myself out of that. If you guys don't want to use the long and short position tool, but still want your take profit and stop loss, then you can just press the trade button up here, or you can just press the buy or sell button, and you can just manually set your take profit and type in the level you want. So let's say if you wanted to buy USD, so let's say I want a $500 take profit and a $500 stop loss, you can do that like so with the market and limit order. As well as a stop order too, but I'm not going to cover this because you don't really need to know it. But let's go ahead and demonstrate this. So I'm going to do a market buy, and it should give me this automatic stop and take profit. And we can see, boom, we can see our prices are now in. So anytime you're trading, you guys need to use a stop loss. So always have a stop loss. You can enter in without take profit, which, you know, that's fine. But stop loss, definitely, like, no matter how good you are, or like how good you think, like if you have a mental stop, like that's not gonna work. And if someone's telling you they use a mental stop, like they're not making money from trading. They're probably not a professional. But because this stop is gonna protect you from like any losses, like anytime the market could just randomly like punch downwards, and if you have a mental stop, I mean, you just get cooked. You'll exit out manually, like at a really bad price. But this basically just protects you from random events, or just like, you know, if price moves against you. And of course, like, you can always set take profit limit order later, so you can do like that. And you can also move your stop loss to break even if you want. So if you want to move your stop closer, or move it like this, so now I'm guaranteed $12, you can do that. But yeah, and then one other way to enter, again, there's many ways to enter, just find the one you like and stick to it, is you can right click the chart and you can do sell limit. So like this. Now I've got my sell limit out, and you can do the same thing like this. So if you want to buy limit, you can do like that. Very simple. And then once you're done trading, right, and you don't want to trade anymore, make sure you don't accidentally take trades. Click this, make sure your positions is empty, orders working should be empty, and I'll show you guys what being in a trade looks like. So if I just enter in right now, we can see positions says long, order nothing yet, but if I have like a stop loss, it should say orders 1, which it'll be under working. Yeah, we can see we have the sell stop loss, and we can see our order history, balance history, this journal. But yeah, that's pretty much all to paper trading. Now you can just press paper trading here and press log out, and now we can see nothing's in the bottom left, and this trade button will tell us to log in. So now we know we are all good to go and close TradingView. Now that's everything for today. For homework, I need you guys to practice some paper trades on ES and NQ. So hop on the charts around 9:30 a.m. Eastern time to 10 a.m. Eastern time. Do 5 market orders, 5 limit orders, and then try 5 orders with the long and short position tool, so you have that take profit and stop loss, and mess around with the take profit and stop loss to see how those orders work. And watch price hopefully hit your take profit or maybe your stop loss. See how it kicks you out automatically, so you can understand how that works. And it's okay if you lose money when you're trying this paper trading, right? We don't have a strategy yet. We haven't backtested anything. You guys are still learning, right? It's okay to lose money. Don't be afraid. Our goal here is just get comfortable with the software and understand how the market moves, and watch those candlesticks as well. Watch them, how they develop over this 30-minute period. But that's everything for today. I'll see you guys in day 5.